Welcome to the Hurst Trading Room. This is a video update for the 23rd of April 2013. It's been a very volatile week in the markets with a good deal of movement in both directions, so it's made trading the markets very interesting. Before we take a look at the markets, please make sure that you have read and understood these disclaimers. In the S&P 500 last week, I was speaking about entering into a short F category trade, which is what we did as the market came down very hard on Monday and crossed down below the FLD. There is the FLD, and so we entered into a short F category trade. Now, of course, we expect following an F category trade, the market should go down and hopefully achieve some of the targets, but it will bounce back up to the FLD. We need to watch it very carefully now, because this might be the market bouncing back up to the FLD in a G category interaction. Or, of course, it might be doing something slightly different, as we will take a look at in a moment in the Nasdaq. If it is bouncing out of a prominent trough, and in the Nasdaq I'll show you how this might be in fact a trough of 20-week magnitude, then if that's the case, then we need to, of course, exit from our short trade. We're in a very small short trade here because, of course, of the great distance between the pivot point right up here and our entry point, which is right down there. So we're in a small position, but nevertheless we need to monitor it very carefully and see what happens as price manages its interaction with the FLD, which it is doing today. So if it clearly breaks up above the FLD, then of course we'll have to exit from that trade and even consider entering into a long trade. Let's take a look at the Nasdaq now. Now in the Nasdaq we also, as discussed in last week's video, entered into a short what was likely to be an F category or perhaps an H category trade in the Nasdaq, and you can see that we didn't in fact enter on the Monday because price didn't cross the FLD on the Monday, but we entered into the trade on Wednesday of last week, entered into a short trade, and our T1 target over here was taken out the next day, and so of course we reduced our risk by bringing our stops a lot closer. By the close of trading on Friday, it was fairly apparent that this trough over here could very well be the 20-week cycle trough that we have been looking at and that we've been expecting. And then in fact we traded, I traded this bounce out of this trough over here, made a nice profitable trade on the assumption that that was in fact a 20-week cycle trough. Price came down a little bit lower and has formed a new trough, and so that looked very likely. And so, of course, what do we do when it seems likely that a 20-week cycle trough is formed in the market? We entered into a long trade as price crossed back up above the FLD, which it did earlier today. So this is, of course, an A category trade, another A category trade, because, of course, we entered an A category trade 2 weeks ago. Now in the euro to US dollar, there wasn't any trading activity because, as I mentioned last week, I was expecting a category B interaction with the FLD, so there's no trading to speak of in the euro to US dollar. So let's go and take a look at the British pound to US dollar, where there is some trading activity to take a look at, and that is because price came down to the FLD last week also on Monday. As you can see over here, which means that we entered into a short, in this case it's a D category short trade. It was a volatile week, as you can see. Price bounced up and down, up and down. It in fact took out our T1 target over here on Wednesday, and so we reduced our risk. But of course we didn't reduce our risk to the halfway point, because remember you must always lower your stop loss level or adjust your stop loss level to a sensible point, usually a point before the move that results in the most recent sort of crossing of the FLD, which in this case was very clearly this level over here. And so our stop loss on this trade was reduced to that point over there. It wasn't taken out as price bounced back up to the FLD, something that you see very often. Let me just zoom in here so we can see it in a little more detail. As you can see, price bounced back up on Friday, right up to the FLD. There's the FLD. Yet another reminder of what a powerful line the FLD is. Price came right back up to it. Of course, we didn't exit it because we were still trading the general move down into this 40-day cycle trough. Now, it is possible that this 40-day cycle trough formed earlier today over here. It is possible, in which case, of course, our T2 target, which is this level over here, wasn't quite reached. Now, when a T2 target isn't quite reached, then, of course, you need to consider getting out of that trade. And indeed we will be getting out of this trade, because the next trade will be an E category long trade as price crosses back up above this FLD, and of course we will exit from our remaining two positions at the level of that FLD as well. Now that we've spoken about the trading that we've done this week, let's go and take a look in more detail at the analysis and the reasoning behind what we're going to be doing next in each one of these instruments. The full discussion of the analysis of each one of the instruments and identification of the upcoming trades can be found in the Hurst Trading Room. I hope that you will join me for the full detailed video in the Hurst Trading Room.